You've also just come back from doing some channel checks in Asia. Are you seeing that same sort of enthusiasm over Apple?
I mean, this is so consistent with what we've seen. The renaissance of growth has begun for Apple with iPhone 16. I think China, look, that was the biggest issue. That was a headwind. Now it's a tailwind. They have mojo going into the next, I think, 6 to 9 months. And that's why, look, a lot of the bears, they've yelled fire in a crowded theater for the last month. But I think they go back into hibernation mode, in our opinion.
Well, they've been yelling fire, Dan, because it's a Chinese economy that's been looking weaker. It's a lot of competition. And that was the reason so many people have said this launch maybe will disappoint and it doesn't have the full AI capacity. Sure. So why didn't it disappoint?
Yeah, well, first, you have 100 million iPhones in China in a window of an upgrade opportunity. I also think the climate there, and we've seen it firsthand, it's definitely much tamer than a year ago, where really the U.S.-China cold tech war, I think, was front and center. The other thing is, it's the best product out there. I mean, if you look right now, the new Huawei phone, I'd say that's the equivalent of essentially an iPhone 14. So when you look at iPhone 16, this is globally going to be the start of an AI-driven supercycle. And again, a lot of those features get rolled out, called over the next few months. I think it's going to be a monster December quarter. I think that's why 6 months from now, we're looking at a $4 trillion market cap for Apple.
Wait, so are you saying that Apple's going to be able to take market share back from some of the homegrown heroes, from the Huaweis of the world?
Oh, yeah. I mean, look, they've gained, call it 300 bips of market share in China over the last 18 months. I think they gain another, call it 100, 150 bips of market share over the next year. And that's going to be very important because China is the hearts and lungs of the Apple growth story. And I continue to kind of handhold investors that this is the beginning of a renaissance of growth in Cupertino. And this data just further supports what we've been seeing in Asia firsthand.
Dan, we're also a few weeks away from just the big tech earnings in general. Just looking at some of the data from what we've had earnings so far, Microsoft, Amazon, Alphabet, Meta, $106 billion in CapEx in first half, almost 50% higher year over year. Most of that going towards NVIDIA and chips. Do you expect this earnings to hear that type of spending continuing at a similar pace? I
think for bulls, get the popcorn ready as those calls start. Because everything we see, it's going to be a robust tech earnings season. I think Netflix kicked it off.
Yeah.
It's because of AI. You have $1 trillion of CapEx. And now, obviously, that's led by Godfather of AI, Jensen, NVIDIA. But I think what we see, not just from NVIDIA, but what we're going to see from the hyperscale players, Microsoft, Google, Amazon, I think software is going to be strong across the board, cybersecurity. I think tech rips higher going into year end. Clearly, election, some volatility, white knuckles. I think 20,000, we're going to be looking at 20K NASDAQ. That's going to be the conversation over the next 3 months.
So if the bulls are eating popcorn, it sounds like the bears might need something a little bit stronger, considering what you're saying. Okay, but there is this risk of an election, and not just an election, but candidates that seem to have both pursuing antitrust policies. Google's a great example of this, and I know you've written a lot about it. They're under the cloud of the U.S. government trying to break it up. Do we see a Google that's maybe more reticent to spend, to make big CapEx plans, if there is this threat looming over them?
Look, in terms of antitrust, and obviously a huge overhang on Google, I mean, we saw it cover Microsoft late 90s, 2000. Like, that is the precedent. I think Google, they learned from Microsoft's mistakes. They're not going to hold back. I think actually it's the opposite. They will double down. They'll fight this in court for years. There will be business model tweaks, but I believe very low chance of any sort of breakup happening. And I think Google, in my opinion, is probably the biggest risk reward in terms of as a large cap tech stock. I think 30, 48 hours upside here in terms of what we see, just even on some of this antitrust overhang.
So antitrust overhang happens, and unlike Microsoft, which kind of pulled back after some of the action against them in 2000, you think Google's going to go full force into things like AI and that sort of thing, even with this threat?
It's a Game of Thrones. It's a battle right now in big tech. They can't just hold back because of this. And also look at Apple and others. It's not just Google that's under scrutiny. Gates' biggest regret from Microsoft was holding back spending in that period. Other big tech players have learned there, but we are still a 1995, almost 1996 moment for tech, not a 1999 bubble moment. I think that's what's going to continue to play out going into not just year-end, but 2025.
What did you make then of the Bloomberg reporting earlier this week that Qualcomm was kind of pumping the brakes on looking at Intel to take it over until the election happens and uncertainty there.
I mean, being tied to Intel, it's a nightmare on Elm Street. So the last thing you want to be in this market is tied to Intel. Even on the ASML and everything else, look at TSMC. Look at Godfather of AI, Jensen, NVIDIA. You want to be tied into the left lane, the Bugattis going 90 miles an hour, not the minivans 45 miles an hour in the right lane.
So what, it's just an excuse to kind of back off of Intel? It has nothing to do with politics? Is that what you're saying?
I mean, I'm just saying right now, you do not want to be tied to Intel in this market.
You mentioned ASML and TSMC. It's so funny how this narrative has been so whipsawed this week. ASML comes out and it's doom and gloom and maybe the chip boom isn't as big. TSMC completely blows that narrative out of the water. What do you make of the divergence between the two? Were we just misreading what we heard from ASML?
I was shocked. We talked about when ASML hit. That to me, that's more legacy on chip side related to Intel. The fact that the AI names were down there, I mean, that was a gift. You look at TSMC, that's the indicator. And I think, look, right from Asia, demand to supply, 15-to-1 demand to supply. And I think that is just not just positive for NVIDIA, it's positive for AMD and others. But I think that's why in this market, you got to be careful in terms of some of the reads.
And in this market that is volatile off of some of these things, does that tell you, Dan, that there's still some weak hands in these stocks? That there's still some nervy investors here that can kind of run for the exits on signs that, as you point out, might not be as telling as they are?
Yeah, I think that's a great question, because I think you're definitely seeing that.
Yeah.
Any sort of nervousness, some white knuckles, head for the elevators. But what we've seen over the last year and a half, 2 years, is that a very similar sort of, I think, chapter play out. But it is 9 p.m., almost 9:30, in the AI party. That goes to 4 a.m. I'm not saying in the midst the DJ stops playing music, there's glass on the dance floor, but this is a party. I think it's really unprecedented in the last 40 years.
With lots of popcorn at it.
Popcorn is what you get ready for those earnings call with tech coming up.